Good morning, everybody, and welcome to Mazars Webinar on COVID-19 and understanding the income support schemes and related employee matters. My name is Frank Greene. I'm Head of Tax and Mazars, and I'm delighted to have you with us today. We are in uncharted and very challenging times, and this challenge is a joint one for government and business. It's going to take significant resources to deal with COVID-19 consequences. However, most economies are in a similar situation. On a positive note, government borrowings have never been at a cheaper cost, and we're likely to see a more coordinated EU approach to the issues compared to what happened during the financial crisis in 2008. Ireland will get back on a growth curve in the medium term, and through the collective efforts of all and a positive can-do attitude, we will come out stronger. People and countries are resilient, and with the right recovery plan and appropriate state support, the Irish economy will rebound, and we will continue to play an important role in international trade. In today's webinar, we will focus on some of the COVID-19 income supports available to businesses and address some of the HR challenges that businesses are facing as a result of COVID-19. This webinar will be recorded and we will share it with you after the event is complete. I'm joined this morning by my colleague Ken Killoran, Employment Tax and Global Mobility Partner at Mazars, and Sonya Boyce, HR Consulting Director at Mazars. You will have an opportunity to submit questions to the presenters by typing your questions in the questions pane on the control panel. You may send in questions at any time during the presentation, and we will collate these and address as many as possible during the Q&A session at the end of today's webinar. So I would first like to hand you over to my colleague Ken Killoran, who is Head of Employment Taxes and Global Mobility in Mazars, and he will deal with some of the main issues around the income supports. Ken.
Thanks, Frank, and good morning, everyone. On the 24th of March, the government announced new measures to provide financial support to workers affected by the COVID-19 pandemic. And as part of these measures, the following income supports are available to employers and employees. The first one there is the COVID-19 Temporary Wage Subsidy Scheme, which is operated by Revenue. And the next three payments are administered by the Department of Social Protection, and they are the COVID-19 Pandemic Unemployment Payment, the COVID-19 Enhanced Illness Payment, and the Short-Time Work Support Payment is also there. So I'm going to cover these in some more detail now. Firstly, I'd like to talk about the Temporary Wage Subsidy Scheme. So what's the purpose of this scheme? So Revenue wants to ensure that all employers experiencing significant negative economic disruption from COVID-19 can register for this scheme, subject of course to meeting the eligibility criteria and start to receive payment as quickly as possible. The scheme enables employees whose employers are affected by the pandemic to receive income supports directly from their employer through the payroll system. The aim of the scheme is to maximise staff retention and the viability of the employer's business through this crisis by maintaining the link between the employer and the employee. So the key thing here is that employers must retain staff on the payroll. The scheme is available to employers from all sectors, excluding though the public sector, public service and the non-commercial semi-state sector, whose business activities are being adversely impacted by the COVID-19 pandemic. The scheme is expected to run for 12 weeks from the 26th of March, and it replaced the previous employer COVID refund scheme. Legislation that established this scheme is contained in Section 28 of the Emergency Measures in the Public Interest COVID-19 Act 2020. And there are also guidance documents published by Revenue, which we recommend that you read. And they are the Employer Eligibility and Supporting Proofs guidance document, which will assist employers in determining if they're eligible to apply for the scheme and what supporting evidence they will need. And the latest version of that one is dated the 20th of April and is available on Revenue's website. There is also a FAQ document on Revenue's website, and version 8 is the current version at the moment. But this, as you probably know, is changing on a regular basis. It is important that employers read both Section 28 of the Act and Revenue's guidance when determining whether they are eligible for the scheme. In case you are wondering what the take-up by employers has been on this scheme, based on data up to the 23rd of April, Revenue has stated that there are over 48,000 employers registered for the scheme and about 337,000 employees have already received at least one payment under the scheme. So which employers are eligible for the scheme? So to qualify for the scheme, employers must be experiencing significant negative economic disruption due to COVID-19 and be able to demonstrate to the satisfaction of revenue that a minimum of 25% decline in turnover and be unable to pay normal wages and normal outgoings fully, and they must retain employees on the payroll. The key indicators are that the employer's turnover is likely to decrease by 25% for Q2 2020, and the business is unable to meet normal wages fully or normal outputs, and any other indicators set out in revenues guidelines. There has been a lot of talk about, as regards cash reserves, there has been a lot of talk about this since the scheme was established. And revenue state in their guidance document that an employer that has been hit by a significant decline in business, but has strong cash reserves, which are not required to fund debt, will still qualify for the scheme, but the government would expect the employer to continue to pay a significant proportion of the employee's wages. However, this is not reflected in the legislation, so employers should be mindful of this when considering their eligibility for the scheme. So what does a likely reduction in turnover of 25% or more mean? So this is a reduction in expected turnover for Q2 2020, and revenue state that the employer is best placed to determine that and may base their judgment on effectively 3 tests. Firstly, you can look at the decline in orders in March 2020 in comparison to February 2020, and I refer to this as the reduction in orders test. Or secondly, the likely reduction in turnover for Q2 2020 compared to Q1 2020, or if appropriate, Q2 2019. And let's call this the reduction in turnover test. Or thirdly, on any other basis that is reasonable, and I refer to this as the alternative reasonable basis test on the slide. I just want to dwell on these tests for a minute. The 25% reduction in customer orders and turnover tests are reflected in the legislation. However, Revenue has stated that where the turnover or customer orders tests cannot be applied to the business in question, an alternative reasonable basis test for assessing eligibility can be used. However, the starting position is that an employer must satisfy itself that neither the turnover test nor the reduction in customer orders test is capable of being applied to the business in question. It's not sufficient that the business does not meet either of these tests before an alternative basis test can be used. And employers using an alternative basis should engage with the revenue division that manages their case. The 25% reduction test may be applied at the level of the company, or if a company is formally structured into individual business divisions, then the test can be applied at the level of those business divisions. Revenue's guidance document provides more information on establishing whether a business division is a formalised structure or not. As regards eligibility supporting proofs, Revenue will not be looking for proof of qualification initially, but they may in the future, and this is based on risk criteria, review whether an employer was eligible for the scheme. So in that context, employers should retain written evidence for their basis for entering the scheme. And Revenue's guidance document contains examples of the evidence that employers should have in place. As regards self-declaration, so obviously when you're registering for the scheme, you are making a self-declaration, and Revenue state that the declaration by the employer when applying for the scheme is not a declaration of insolvency. Revenue guidance states that as a result of disruption to the business which is caused by the pandemic and based on reasonable projections, the declaration is simply a declaration which states that there will be a decline of at least 25% in the future turnover of or the customer orders for the business for the duration of the pandemic, and that as a result, the employer cannot pay normal wages and outgoings fully, but nonetheless, the employer wants to retain its employees on the payroll. So what is an eligible employee? This changed last Friday to give access to the scheme for certain employers who may have missed the 15th of March payroll deadline. And as a result of that, a new definition is now included in version 8 of Revenue's FAQ documents that just issued the other day. So an eligible employee is someone who their employer cannot afford to fully pay because of the COVID-19 crisis, who was on the employer's payroll on the 29th of February, whose pay and tax details were reported to Revenue in a qualifying payroll submission and has been kept on the employer's payroll. The guidance document does contain a bit more information on this, but I'm just going to focus on, at this stage, given the date that we're at. So for submissions that are made after the 24th of April, with pay dates on or after the 24th of April, qualifying payroll submissions are submissions that meet all of the following conditions. So the employer must, for any pay dates during the month of February 2020, have made payroll submissions for payments to the employee to Revenue before the 1st of April 2020. Also, the employee must be reported in a valid payroll submission with a pay date in the month of February 2020. The employer must have made a submission with a pay date in February 2020 before the 1st of April 2020, and on or after the 1st of April 2020 has not amended or deleted the submission. If it is amended or deleted on or after the 1st of April 2020, then the original submission and any subsequent amendments are not valid submissions for the purposes of employee eligibility for the scheme. And payroll submissions for all previous months must have been submitted to Revenue before the 15th of March. As you can see, that it's quite a technical amendment there, so it's important that employers look at that. There is no age restriction for employees to be eligible, and it includes those employees on full-time, part-time, temporary and short-time work arrangements. I just wanted to mention another thing, and it's not actually covered on the slide, but I think it is important. So an employee is not an eligible employee if they are not included in a qualifying payroll submission, or if their gross pay as reported in their payroll submission exceeds €960 per week, or if the sum of the payments, and we're talking about the subsidy here, plus any top-up payment by the employer, but excluding any tax refunds that arise, payable to the employee in the week being processed exceeds the average net weekly pay. Okay, I'd now like to talk about the changes to the rates of subsidy due to be effective from the 4th of May, and this will begin phase 2 of the scheme. So on the 15th of April, the Minister for Finance announced further changes to the wage subsidy scheme, aimed at ironing out some anomalies that were identified in the scheme. Now, these changes will only take effect for payrolls run on or after the 4th of May 2020, and they cannot be backdated. This move came after employers said that some of their part-time and low-paid staff were not working because they could earn more from the pandemic unemployment payment, which is payable by the Department of Social Protection. So in essence, the new changes are set out across various categories of earners, which I will cover in the next couple of slides. Please note that the calculation of the average net weekly pay for all categories continues to be driven off actual pay received in the months of January and February 2020, and that's important to remember. The categories that I will go through now are based on the guidance that is currently available on Revenue's website. But please note that the Revenue has stated in its FAQ document that it will provide further guidance and hopefully some examples in a future version of that document on how the new changes will apply in practice prior to the launch of phase 2 on the 4th of May. Okay, just to go through the categories then. So you can see there, I've divided them up. This is not what Revenue say as regards categories, but just for the purposes of trying to explain them, I've just divided them up into categories. So category A, these for those employees whose average net weekly pay is less than €412 per week, they will receive a subsidy of 85% of their average net weekly pay. The Minister for Finance, should also be noted, the Minister in his recent announcement also said that there will be no tapering of the subsidy in this category if employers want to bring employees up to €350. And this is aimed at keeping more part-time workers on the payroll. As regards category B then, so if the average net weekly pay is between €412 and €500 per week, then a flat rate subsidy of up to €350 will apply. In terms of category C, if the average net weekly pay is between €500 and €586 per week, a subsidy of 70% of the average net weekly pay will apply, subject to a maximum of €410 per week. Category D then, if the average net weekly pay is between €586 and €960 per week, a new tiered approach will apply with a maximum subsidy of €350, depending on the level of employer top-up. The tiered approach takes into account both the amount paid by the employer and the level of reduction in pay borne by the employee as follows. So if the employer top-up is less than 60% of the average net weekly pay, then the maximum subsidy is €350 per week. But if the employer top-up is between 50% and 80% of the average net weekly pay, then the maximum subsidy is €205 per week. Or if the employer top-up is over 80% of the average net weekly pay, then no subsidy is payable. As regards category E then, so this one actually came into play already. So from the 16th of April, the wage subsidy is available to support employees whose average net weekly pay was greater than €960, but their current salary, their current gross pay is below €960 per week now, subject to tiered arrangements and tapering. So this is a welcome change, as the wage subsidy is now available to support employees where their pre-COVID-19 salary was greater than €76,000 gross per annum, and their gross salary has now fallen below €76,000 gross per annum. Where the gross pay, as reported in the payroll submission by the employer, represents a reduction from the average revenue net weekly pay by less than 20%, then no subsidy is payable. Or if the reduction is between 20% and 39%, then a subsidy of up to €205 is payable. Or if the reduction is 40% or more, then a subsidy of up to €350 is payable. Now, the maximum top-up that an employer can make to receive the full subsidy is the difference between the employee's average revenue net weekly pay and their maximum weekly wage subsidy. And as I said, this category is already in play since the 16th of April. As regards category F there, and I just included this for completeness really, I just wanted to mention that if the average net weekly pay is over €960 and the gross annual salary remains over €76,000, then no subsidy is available, and these employees are excluded from the scheme, which was the case before anyway. Okay, I'd like to move away from the wage subsidies scheme now, and I'd like to talk about the pandemic unemployment payment. And this is administered by the Department of Social Protection, and it is another form of income support for an individual. So what's the purpose of this payment? So the COVID-19 pandemic unemployment payment, it's an emergency payment of €350 per week. It was introduced by the government for a 12-week period, and it is intended to compensate those workers whose employers cannot retain them on the payroll. So that's important. And the payment will also be made to people who are self-employed, but whose trade has temporarily ceased. So who is eligible? So an individual is eligible to apply for the pandemic unemployment payment if you were in employment or self-employment immediately before the 13th of March, and you have been temporarily laid off from work or asked to stay at home from work, and your employer is not in a position to retain you on the payroll, and you are not in receipt of any employment income, and that you are between 18 and 66 years of age. So what's the rate of the payment? The rate is €350 per week, and employees can sign up for the payment for 12 weeks. As regards the tax treatment, Revenue and the Department of Finance have confirmed recently to the Irish Tax Institute that this payment, as it currently stands, is chargeable to income tax. But we await confirmation from the above authorities in relation to whether the tax will be collected by Revenue by way of an end-of-year review, similar to the subsidy payable under the temporary wage subsidy scheme. So how do employees apply for this payment? They can apply online at mywelfare.ie or by post by completing and submitting the COVID-19 pandemic unemployment application form and sending it in by free post to the Department of Social Protection, or by dropping the application form into the employee's local Intreo office. Just to give you a sense of the amount of people claiming this payment, as of the 20th of April, about 584,000 people were receiving the pandemic unemployment payment. Okay, I'd now like to talk about a different payment. It's the COVID-19 illness benefit. So the purpose of this payment is to provide income support to employees who've been told to self-isolate by a doctor or the HSE, or have been diagnosed with coronavirus by a doctor. In order to qualify, the employee must be unable to attend work and medically certified as being required to self-isolate or unfit to attend work due to have been diagnosed with the coronavirus and confined to their home or a medical facility. It's available to employees and self-employed workers irrespective of PRSI contributions. Just to note there, individuals whose sole income is their social welfare payment, then they need not apply as they will keep their existing payment. The rate for this payment is €350 as compared to the normal illness benefit rate of €203. Employees can avail of the COVID-19 illness benefit for a maximum 2 weeks where the person is self-isolating, and for a maximum 10 weeks where a person has been diagnosed with the coronavirus. If a person has been certified for less than 10 weeks, then they will be paid for the duration of the cert. Employers may top up the enhanced illness benefit in accordance with their sick pay policy. As regards how you apply, employees can apply by submitting their medical certificate and applying online at mywelfare.ie, or by post by completing and submitting a form IB1, sending this to the Department of Social Protection Illness Benefit section. Finally, I'd like to talk about the short-time work support payment. So the purpose of this one is, it's a form of job seekers benefit, and it's an income support payment if you've been temporarily placed on a shorter working week. The payment is made in respect of the employee's regular salary for the days that they are no longer working. In order to qualify, the employee must be under age 66, and they must work 3 days or less per week, having previously worked full-time. They must be capable of work and available for full-time work, and they must be in receipt of sufficient PRSI contributions. As regards how much it is, an individual's duration of eligibility and the rate of payment for the short-time work support depends on their PRSI contributions, weekly earnings, and the nature of the change to their work pattern. In terms of how you apply for it, the employee can apply for the payment online through mywelfare.ie, or by submitting a form UP1 that's completed by the employee, along with a form UP14 which is completed by the employer, and that's sent into their local Intreo centre or social welfare branch office. Finally, I'd just like to finish up by sharing, I suppose, a somber statistic that I came across recently, and that is that when you add up all of the people on the various income supports, there are now over 1 million people that are now completely or partly dependent on the state for income support, which is unparalleled in the history of Ireland. That concludes my presentation, and I will now hand you back to Frank.
Thank you very much, Ken, for those very useful insights. I think it is important that we understand that these are, government supports in the context of both the welfare supports and also the wage subsidy scheme. And I certainly would encourage all qualifying employers or businesses to avail of them, because in essence, it does give support for, it's a temporary period of time for 12 weeks up to the end of June. That may well be extended. But I think, as we all know, in terms of this COVID-19, it is all about time. So therefore, if we can buy time where employers can continue to hold on to employees and support their incomes, that is hugely important. And as I said, while there has been some difficulties with the particular schemes, the Revenue Commissioners, I think, have been very forward in terms of suggestions around how they can be used, and there's very useful guides up there on their system. So we've received a number of questions in, and we'll address these questions at the end of the webinar, and please continue to submit your questions. I would now like to introduce you to Sonya Boyce. Sonya is the HR Consulting Director in Mazars, and she will deal with some of the practical and legislative HR issues that employers face. Sonya?
Thank you very much, Frank, and thank you, Ken, for that very comprehensive overview on the various supports and wage subsidy schemes introduced by government for businesses suffering a significant impact. In addition now, from a HR perspective, as we journey through this pandemic, I would like to highlight today some other considerations and challenges that businesses need to be aware of and give due consideration to both now and over the coming weeks and months. We are living in a very different world, and the impact in workplaces across Ireland has been significant. It is incumbent on every citizen of this country to fulfil their own personal responsibility to prevent the spread of COVID-19. And importantly, this duty also falls to every employer in Ireland. As we all know, the world of work as we know it has changed dramatically in recent times, and most businesses are managing significantly reduced levels of business activity, with the return to normal levels still an uncertainty for many. I would encourage employers to make the best use of this quieter time by focusing on business development opportunities, ensuring staff are pursuing relevant training and development courses, and upskilling staff in other areas of the business. Preserving the culture and ethos of your organisation is key. And with such dramatic change happening, there is a risk that the day-to-day interactions that fuel morale, creativity, and foster an exchange of ideas will or could fall by the wayside. So do make a point of scheduling time for catch-ups within your teams and hold one-to-one meetings to ensure that ideas, innovation, and creativity is fostered and encouraged. A further key challenge faced by many employers is around maintaining regular, effective communication with staff whilst everybody is working remotely and teams are dispersed. It is key to ensure that everybody in the business is kept updated on the latest developments and that day-to-day updates are provided to all. This is a key activity to ensure that all people remain connected and the risks of social isolation are minimised. The pandemic has impacted the entirety of the country, and much of what is happening in your own companies right now is driven by this. So as employers, you need to ensure that you convey the link between the national situation and what is happening in your own company. It is important to explain how the company has been impacted and what changes and precautions you are implementing as a result. Effective communication tools that we have seen used to good effect include regular virtual team meetings held via, for example, GoToMeeting or Skype, Microsoft Teams, Zoom or similar. It's also important that virtual team coffees or lunches are held to help maintain and ensure solid communications during these challenging times. In terms of your own existing business networks, including your existing clients, your customers, and the myriad of stakeholders, it is now more so than ever crucial that you check in with these key contacts. In the immediacy of the crisis, many businesses focused on the task in hand, for example, ensuring that remote working was in place, whereas now the focus for all of us must include the maintenance and development of our existing business networks, as it is these relationships that will be critical to sustaining our businesses in the medium to longer term. Turning now to an issue which has hit many homes across the country, balancing the dual role of employee with that of carer and parent. Balancing the needs and requirements of both of these key roles is not without its own set of challenges. And with schools and creches remaining closed for the foreseeable future, employers need to be flexible with employees and creative in the ways that this flexibility is realised. This might include allowing employees to reduce their working hours where possible, or work a pattern of hours that allow them to balance and manage their own time. It might also be an option to look at employees availing of annual leave or parental leave or unpaid leave until such time as alternative arrangements are possible. And our advice to all employers in these circumstances is to proactively engage with your employees, listen to the suggestions that they may have, and to try and work out solutions that work for both parties. And finally, as businesses continue to manage the financial impact of COVID-19, many have had to and will have to consider the cost-saving measures, such as temporarily reducing working hours or laying off staff for a period. And I'll discuss this in further detail later on. Now, from a HR perspective, in terms of ongoing HR matters, an important take-home message for everybody today is to do a policy check. The pandemic has seen many organisations in a reactive state responding to the immediate employment challenges. However, it's important to remember that all existing company policies and procedures continue to operate in the usual ways. So employees should still be in a position to manage annual leave requests, to submit sick leave requests, to deal with issues around timekeeping and working time records, conduct return to work meetings, and ensure performance management cycles continue. Where there are existing live issues under, for example, the grievance or disciplinary or dignity at work policies, employers should also consider how these can be managed over the coming weeks. There are several HR policies that can support businesses at this time to ensure that employees are managed correctly. And these policies include, for example, the sick leave policy, your annual leave policy, and your working from home policy. And my advice would be to all employers to ensure that you are up to date with the contents and provisions of these important documents. Now, turning to look at the options in relation to the employment relationships you hold as an employer, termination of employment is something that nearly all businesses will encounter over the coming weeks and months. And this termination may occur naturally, for example, through retirements or the expiry of fixed term contracts, or through indeed an employee's change of career. And in these cases, all employers should manage the processes as normal, ensuring that they are managed appropriately in accordance with Irish employment legislation. In terms of layoff or reduction of working hours, under the Redundancy Payments Acts, a layoff situation arises where an employer is unable to provide work for an employee, but believes this to be a temporary situation. You must give notification of the layoff, ideally in writing, before it commences. And during any period of layoff, staff remain as employees, even if they are not being paid. The layoff arrangement is deemed to be a temporary measure and is based on the understanding that the employee in question will return to the same role under the same terms and conditions after a set period of time, rather than it being a complete cessation of employment. Whereas short-time working can be best understood as a very specific situation whereby an employee's weekly pay is less than half their normal weekly pay, or the hours they work are reduced to less than half of their normal weekly working hours. In such cases, you as an employer, has a reasonable belief that the situation will also be temporary, and they will notify you of reduction in hours and pay. During both situations, an employee is still employed by the employer and their contract of employment remains in force. Employees do not accrue annual leave during layoff, but are entitled to take annual leave that has been accrued before the layoff. In both situations, it is critical that the employment contracts of the employees in question contain a provision for layoff and short time. There has been an important change in relation to the law on redundancy introduced under the Emergency Measures in the Public Interest COVID Bill, which says that an employee will not be able to claim redundancy during the emergency period if they were laid off or put on short-time work as a result of the pandemic. And the emergency period set out in the legislation is between the 13th of March 2020 up to and including the 31st of May 2020. And indeed, this period may be extended. Redundancy generally occurs where an employee loses their job due to circumstances such as the closure of the business or a reduction in the number of employees. And the reason could be due to the financial position of the company, a lack of work, a reorganisation within the company, or perhaps because the company is closing down completely. The situation is provided for in the Redundancy Payments Acts legislation, which provides a minimum entitlement to a redundancy payment for employees who have set a set period of service with the employer. The statutory redundancy payment is a lump sum payment based on the pay of the employee, and all eligible employees are entitled to 2 weeks' pay for every year of service, plus an extra week. The amount of statutory redundancy is subject to a maximum earning limit of €600 per week. To be eligible for redundancy payment, an employee must meet the following requirements and be age 16 or over, be in an employment that is insurable under the Social Welfare Acts, and have worked continuously for the company for at least 104 weeks. Finally, in relation to termination of employment, as I have mentioned, employees will inevitably opt to leave businesses during COVID-19, either through natural turnover from retirements or the expiry of fixed term or specific purpose contracts and or career progression opportunities. And in such eventualities, all companies should ensure that they are able to deal with terminations of employment in the usual ways. I know that there has been a lot of information to take in over the course of the webinar, so I would like to thank you for your time and attention today. The Mazars HR consulting team have created a HR toolkit, which will be sent and available for you all later on today. So please do not hesitate to reach out if you have further questions or require support from the HR perspective. We will be delighted to work with you through the challenging times ahead. I'll pass you back now to Frank and we'll take some time for some questions. So thank you very much. Over to you, Frank.
Thank you, Sonia, for those very good insights on the HR side. And I think it is very important that while dealing with wage subsidies and income supports here, that we don't lose sight of the staff aspects and the people side of it. So I think that many of the aspects on a practical level that Sonia has indicated there is something to certainly bear in mind. So we'll head on in now into the Q&A session. We've got quite a number of questions in here, and what I've been trying to do is group some of them together because there is a degree of overlap on some of them. So we take as many as we possibly can, and if we don't get to any of them, any questions people have, we can certainly address specific issues with people. So there's some questions in here. Ken, I'll go to you first in relation to the first question we have is, I'm an employer in the retail sector who needs some staff for online sales, but some other staff are not actually working. And can I use both the wage subsidy scheme and the pandemic unemployment payment for different staff?
Okay, so the story is if an employer has laid off staff and they're not in a position to retain them on the payroll and pay them, then the employee can claim the pandemic unemployment payment from the Department of Social Protection. However, I suppose revenue encourages employers to, revenue wants employers to keep people on the payroll if they can, but employers must not operate, or they can't operate the scheme for any employee who's also making a claim for the pandemic unemployment payment. So, I think employers should be mindful that revenue is also sharing information with the Department of Social Protection. So if the Department of Social Protection notice that any employee is receiving both the pandemic unemployment payment and the wage subsidy scheme, then the Department of Social Protection will cease the pandemic unemployment benefit.
Great, thank you, Ken. Just a follow-on question, a second question for you, Ken. If I have paid, or if I've applied for the wage subsidy scheme in March, sorry, if I've not applied for the wage subsidy scheme in March and April, can I apply for May and June?
Yes is the answer. So the scheme, as people know, it started on the 26th of March. It's expected to last for 12 weeks, which would bring it up to, I think it's the 18th of June. So an employer can apply for it anytime during this period, provided obviously that they're satisfied that they meet the eligibility requirements to do so. But backdating of payments is not allowed. Okay. Just another thing on that is that something I've been thinking about is that, as regards to June payroll, I think there's a bit of a grey area at the moment around what happens if the June payroll run is run after the 18th of June, because I think technically that's the end of the 12-week period from the 26th of March. But I think Revenue have said that they will issue further guidance on whether all of the June payments will be included in the scheme or not.
So some questions for Sonia on the HR side. If we use the pandemic unemployment scheme and temporarily lay off staff for the 12-week period, does this trigger any employment law aspects that I need to be aware of, for example, redundancy?
Thanks, Frank. Yes, so the change introduced under the Emergency Measures COVID Bill states that an employee will not be able to claim redundancy during the emergency period if they were laid off or placed on short-time working arrangements. And that emergency period, as I mentioned there, is set out as being from the 13th of March up to and including the 31st of May.
And a follow-up question, Sonia, how would you suggest we communicate with employees where we go into either of these schemes?
Yeah, so I suppose really, Frank, our advice in relation to communications would be to really communicate as early as possible, to take the time to explain the rationale to employees for going into the scheme. You know, it can be very helpful to have an FAQ sheet made available, and ultimately as well to confirm the details in writing to each individual employee.
Great, thanks, Sonia. Just one or two questions that I'll take myself. If a company has historic reserves, can we still access the wage subsidy scheme? The answer to that is yes. There's no bar to that. I think it's important that people understand that one is primarily looking at activity, as indicated by Ken, in the period from the second quarter of the year versus other particular periods. So historic reserves have been built up in prior periods don't come into play, except that the revenue commissioners would expect employers to top up the wages of employees where there is actually historic reserves available. Next question, how is tax paid on the wage subsidy scheme? The tax is actually not deducted through the payroll system, but the actual wage subsidy is liable to income tax on review at the year end. So each employee who avails of it, either the revenue commissioners will issue a statement to them or they'll file a return, and the tax due on that will probably be coded into their tax credits in the following year or perhaps the following 2 years. The revenue commissioners are fairly flexible in relation to, but as it currently stands, it is not taxable through the POI system, but it is taxable. A question for Ken. As regard to the changes announced by the Minister of Finance on the 15th of April for employees earning over 76,000 but have taken a pay cut, when does the pay cut have to have taken place?
Okay, so the pay cut can happen anytime between the 1st of March and the end of the scheme. As people probably know, that prior to the 16th of April, these particular category of employees, they weren't eligible for the scheme, as their average net weekly pay was greater than €960 based on the January-February payroll submissions. But as regards to the question, the pay cut can happen anytime between the 1st of March and the end of the scheme.
Great, thank you, Ken. And we have a question as well. Can businesses that are organised on the basis of divisions, departments or branches access the wage subsidy scheme, even though the overall company would not qualify? Just in that regard, initially the situation was that you would not qualify on the basis that if the company didn't satisfy the 25% reduction criteria. But the revenue commissioners, I think on reflection, have issued further guidance on that, and they've indicated that businesses can look at departments, and provided there are separate management functions within those particular entities for those departments, then they should be able to qualify. So that leads to a situation where you may have a certain area of a business that would be able to get the wage subsidy scheme for those employees, but you can't get it for the others. Whereas prior to that clarification, the company would just not qualify at all in relation to it. There's a couple of other smaller questions or points that have come in. Is there any clarity on how the government will reimburse its subsidy payment to employers? That's done through the ROS system, and it's done within 2 days, so it's actually quite efficient in terms of it. We also got a question in relation to where if employees receive net pay over and above what they would have got prior to this, how should that be dealt with? What we would recommend is that the employer and an employee would take note of that, because that refund could arise for many reasons, including changes in the average net pay for a particular period, or it could be down to tax refunds due to the non-utilization of tax credits. And what we would advise employers is to get employees to set that money aside to fund the ultimate tax bill that is payable when they file a tax return, or when the Revenue Commissioners issue a statement in terms of the particular liabilities. So that's most of the questions that we've tried to get through, while bearing in mind the timelines as well in relation to it. So I would actually like to thank Ken and Sonia in particular for their insights today, and thank you all for attending the webinar and understanding the various income supports and the HR aspects. If you have any further questions, please email us, or you can visit our website for additional information on all of those particular schemes, plus also the HR toolkit that you can download that Sonia related to or referred to earlier on. Once you leave today's webinar, we would appreciate if you could complete the survey that we would send to you, and if this could be sent back to us within a reasonable period of time. You will also receive a follow-on email shortly with a view to the recording of today's seminar. And finally, we'd like to thank you all for attending, and good morning.